Sam Stovall is standing by, too. He is CFRA's chief investment strategist, and Bill Lee, Milken Institute's chief economist. These guys, I'll throw you anything here. But Bill Lee, first off to you, what jumped out at you with Powell? Because he did mention the tariff wars when asked. And what he is starting to see, he called it a chorus of concern.
Right, but the chorus of concern, he said, it was just noise. He's not seeing any real effects on the economy, and I think that's really the key. The honesty and pragmatism of Chair Powell says...
hold on. Then I misheard. He said he's hearing news of disrupted supply chains and higher material costs. He did say we're not there yet when it comes to a ding to the confidence of businesses.
Precisely, and that means that the real actions that they're going to take in anticipation of more tariffs isn't there yet. And I think what the markets are really seeing is that there's a new trade regime that the U.S. and China are going to be negotiating as soon as we can get them to the table. And I think that's where Chair Powell is being very pragmatic and saying there could be a lot of good things that come out of this, and let's see what happens. Because he's taken away the word accommodative because he wants you to know we don't know where accommodative is. We're not that precise. Don't hold us to decimal points. That's the message of the new chair, and I think that's going to be the best thing the markets have ever had, because over precision is what the markets have traded against and where the markets have gone wrong.
Sam Stovall, this minor fall at the moment, down 122, but when you look at the swing, it's more than a 230-point swing. Is this a buying opportunity today?
Oh, I think it is. Certainly, you know, as we're heading from a seasonal perspective into the fourth quarter, the market traditionally rises more than 80% of the time, whether you're looking at a midterm election year, whether you're looking at regular years, et cetera. And with third quarter earnings about to be released, looking for growth of about 22%. And let's remember that we've just seen 26 consecutive quarters in which the actual earnings exceeded end of quarter estimates by an average of almost 4 percentage points. So I think investors are hoping to see this kind of outperformance once again.
Yep. He mentioned JP Morgan. He did not mention. He mentioned credit card rates and how the consumer will be affected by a rising interest rate environment. Again, we shouldn't be in a collapsing interest rate environment because we're not in an emergency situation anymore. But names, Charlie, like JP Morgan, which of course is Chase, and then Capital One, these are names that we watch very closely. But also the consumer will start to get hit.
What I took away from Powell and his sort of a wishy-washy.
I didn't see it that way.
No,
but...
I did. I mean, there was nothing certain about it. I mean, one of the problems I think policymakers have is that they really don't know just how much the economy is going to be inflated based on fiscal policy. You don't know just how much the GDP is going to grow. We don't see very good, at least now, wage growth. You know, we had this discussion on Cavuto's show yesterday. I debated Liz Peek and somebody else about wage growth. I went back and checked the numbers. The wage growth right now, at least now, under President Trump is literally the same as it was under Obama, maybe 2 points, 2 ticks higher.
So, Bill Lee, does that go higher? Do we start to see that with labor pressures?
My point is, just let me make my point. My point is we don't know how much inflation is in the economy.
Okay. Bill?
That's right, and that's what Chair Powell's telling you. Yeah. Don't be so precise. We don't know where things are, and we're going to do policy by a step at a time.
You think he was too precise, Bill?
I think Chair Powell rolled back all the precision that was there in the past chairs. And I think Charlie's just absolutely right. We should not be overconfident about what we know and be more humble about what we don't know. And that's exactly what Chair Powell said today. 5 seconds,
Sam, your favorite sector here.
My favorite, I think we're going to see a rebound in technology. It's one of the best performers in a rising rate environment, low dividend yields, so you don't have much competition.
Good to see all of you. Sam, Bill, Andy Brenner, and, of course, Charlie Gasparino.